Well, it's been a bad day for stocks with the ASX 200 index down 43 points or 0.65%. But our market is up about 20% year to date. So we're due for a sell-off. Also, a lot of companies are in the blackout zone ahead of reporting. So there's a news shortage. So when AMP copped the bad news that the Kiwi Central Bank is going to make it difficult to sell the life insurance business, the market clobbered it. The share price down 16%, and more on that later. Now, coming up on the show, Paul Rickard will tell us if AMP is a buy or whether we should wave bye-bye to the insurer. We'll talk to Bitcoin lover Alex Nugget Saunders of Nuggets News about why I might be wrong to call for a ban on Bitcoin and other cryptocurrencies. We'll shine the spotlight on an Aussie tech business worth billions, which most of us have never heard of, called Canva. But before that, let's just catch up on the market today and get some stock tips from a couple of professional market players. This is my usual catch up with Julia Lee from Bell Direct and Michael McCarthy from CNC Markets to work out why the market went down today. Julia, what's your best guess?
Look, the market's been doing really well, so let's not forget that in the last half year we've seen the Aussie share market up around about 18%, or if you include dividends up by 22%.
Yep.
I guess the market's getting a little bit nervous now, and part of that I think were the numbers that we saw out of China over the weekend, especially the weaker than expected export and imports numbers coming through. Although today we saw a raft of numbers coming through for the month of June, and industrial production, retail sales, they were all ahead of expectations, and GDP pretty much on expectations.
Okay, Mike?
A top-down seller, Peter. The people who know why we went down today can't say so, because it's very likely, and it looked to me like there's at least one very large institutional and possibly international seller in the market. The clue came on Friday night. Despite good gains and record highs in the US market, Australian futures finished down on Saturday morning, down 30 points. And that tells us that's somebody who's operating at a country level rather than individual stocks. And of course, the fact that we've got school holidays at the moment in a number of states, volumes were right down. So this order or orders had a larger than expected impact on the market today.
All right, guys, so I read something really smart today, which I wrote, of course. And I'm looking for reasons to believe that we can see an economic rebound in the second half, even if it's in the last quarter. I'm putting together the wage rise for minimum wage, tax cuts, interest rates. You start throwing it all together, there's a good reason to believe we can rebound. But I thought the fact that our market's up nearly 20% since the beginning of the year, the stock market is allegedly a good forecast of what's going to happen in the future. Do we trust this 20% rise, Michael?
Trust the price action over the sentiment, Peter. And just as markets now react a lot less to a tweet from the White House, I think consumers will start to react a lot less to the constant drip of doom and gloom. The reality is people have been predicting a recession for 10 years and it's never turned up. At some stage, consumers say, well, they don't know what they're talking about. And then we'll start to see, I think, an emergence. And the thing is, consumer demand has been held back for so long that once the genie gets out of the bottle, we might be worried about the inflationary impacts of a sudden change in consumer behaviour.
Yeah, Julie?
Don't forget that interest rate cuts are used to try and lessen the impact of an economic slowdown. So we've started to see some of those interest rate cuts come through. And together with the tax cuts, hopefully that softens the blow and helps to try and stimulate the economy. I think the greatest risk for the Australian economy are external factors. I think here domestically we are seeing revival in some key sectors.
Yeah, and I guess the important thing is those tax cuts, no one's received them yet. And very few people have actually benefited from the interest rate cuts yet. So they are in the pipeline in many ways, aren't they?
Absolutely.
Yeah, okay. Let's talk about stocks. Like I noticed Cobra copped it again today. Lithium. Is there anyone who is, like, to me, lithium and batteries is the future. But have we over-arced it or something like that?
Look, this happens when you invest in commodities. For me, the warning signs in terms of commodities and the time to get out is when you see a massive supply response. And we saw that with SQM a couple of years ago. And to me, that signaled that the easy money in terms of lithium was over. I think the lithium price at the moment is really being dictated by what's happening in China. And we have if we have a look at lithium carbonate prices over in China, they've just been on a downward spiral. Part of that is the electric vehicle rebate over in China and the changes we've seen there, which has seen, I guess, the demand for electric vehicles in China coming off, but also the supply response that we're seeing. So look, lithium's been a sell for me for a while, and I don't think that that's going to change anytime soon. I mean, I think the future is certainly lithium in terms of electric cars, but for the time being, the supply response is outweighing the demand.
Michael?
I didn't get caught up in the first run-up, but I did buy Galaxy Resources on the way down because although I certainly acknowledge that supply side response is very important, particularly in the near term, that long-term demand's attractive. So I've been stopped out of my Galaxy, and I think it is still too early. The price action there is weak. Having said that, Galaxy reports sales, quarterly sales next week. So that could be a catalyst for at least stabilisation in some of the share prices in the sector. It might not be though, Peter.
Everyone loves gold. Well, they think they
Not
love
me.
gold. No, everyone thinks they love gold, but
What's not to like about gold? It's shiny, it's heavy, it doesn't
useless.
change even if you like
yeah, no,
bury it under the ground.
My opening statement was wrong. Lots of people are interested in gold, and they always
looks
want to know:
beautiful.
is
I love to sell it.
is it the time to buy gold? That's a question I get a lot. So. Obviously, you're biased about gold because you like to wear it, I guess. But what is your view on gold now?
Look, I've been buying gold in many forms over the last 5 years, whether it's from gold bars, well, not exactly a gold bar, 10 ounces of gold, to gold companies. And I would have done much better in terms of gold companies. But the attraction
Northern Star has
of
done
gold,
pretty well at that
yeah,
time,
and Evolution as well.
Yeah.
The attraction of gold is twofold. One is the gold price, which, around 1,400 US an ounce, and breaking those levels is looking attractive. But the other is the Aussie dollar equation. And the Aussie dollar of gold at record highs. We're seeing Aussie investors really in quite a good place. A lot of this has to do with interest rates. So as interest rates continue to fall in the US, people are going to be looking for an alternative to the US currency, as we saw during the global financial crisis and thereafter. So I think gold at the moment feeds into interest rate expectations, US interest rate expectations.
What percentage do you hold of gold?
Not much at the moment. I've been selling.
That was the point. That gold can play a part of your portfolio, but if you're going to go long gold, it's like going to races and betting on a racehorse that you don't tip us on. No, when you do tip it, it doesn't win. Okay, Michael.
No. Well, first of all, for mine, I'm looking for the price action to tell me what's happening. At the moment, I see a floor at 1,380 US an ounce and a ceiling at 1,430. So there's a $50 range there, and gold's been stuck in it for some time, despite all the changes. I think the most recent strength relates to those surprisingly strong inflation numbers out of the US on Thursday and Friday night. Gold traditionally is a hedge against inflation, and in a low interest rate environment, penalties for holding gold are less. So it's getting good support. A weakening US dollar is also helping, but frankly, they're all the conditions that should see gold breaking through that ceiling at 1430, and the fact that it's not tells me that perhaps the next test might be 1380.
And isn't it just amazing that we're talking about interest rate cuts in the US when, as you mentioned, the inflation numbers were stronger than expected, the job numbers that we saw recently stronger than expected. So, the Federal Reserve's mandate was...
Yeah, but there's a very unusual man in the White House that's actually questioning the mandate.
So is it about ensuring for economic growth, or is it about prolonging the economic cycle, which is extraordinary?
Jerome Powell actually said, we are in a good place and I want to keep it there. So that was a very interesting thing for him to say. It seems like his ultimate justification for giving in to Donald Trump. But the reality is, I think they're going to cut. What do you guys think?
Absolutely incredible.
Cut?
Well, markets are priced in 100% pretty much on 25 basis points.
Okay. I always ask you for your stock of the week. Eclipse got up for you?
I'm staying on Eclipse. I completely forgot that it was my recommendation last week.
So you're doubling up.
I still like Eclipse. Look, I think it's going back to its core business of novated leases and fleet leasing, and that's a much more stable cash flow. So the market's going to start to value that company on its core business rather than some of the problems that it's been having.
Michael?
Peter, I'm not going to give you specific stocks because my current strategy is to be in small caps. And given the clout of the Switzer report, I don't want to be, seem to be rigging markets, as it were. But so that's where I'm at in the cycle at the moment. I think we're in the late phases, and small caps generally play catch up at this time.
Yep.
But one that caught my eye,
Rotation to them.
exactly. One that caught my eye today was Harvey Norman. It's not often we see it in the top 10 performers, but there it was. A good gain today, more than 2%, and well over that $4 a share mark. So clearly recovered from the attack of the short sell.
Interest
Tax
cuts and tax cuts and all that. So if you believe in the economic comeback, Jerry would be a beneficiary of it as well. And also, I guess for those people who don't want to pick companies, there are ETFs out there that play the small cap, don't they? So that's where we're having a look. Guys, great seeing you as always. See you next week.
Thanks, Peter.
Michael McCarthy, CMC Markets, and Julia Lee from Bell Direct. Hi, I'm Peter Switzer.
And I'm Paul Rickard, and we'd like to invite you to our 2019 Switzer Listed Investment Conference.
Now, the Switzer Listed Investment Conference brings together some of Australia's best money managers. On the day, they'll tell you how they're investing both at home and abroad and give you tips on how you can maximise your investment portfolio. Tickets are only $49 and available to purchase now. Don't miss out on your opportunity to hear from Australia's best money managers by securing your spot now. For more info and to purchase tickets to the event, head to www.switzerevents.com.au. Attending will help you make well-informed financial decisions this year and maximise your portfolio. So Alex, thanks for joining us on the program.
My pleasure, Peter. Thanks for having me on.
All right, Alex, so you and I are talking because, I had the temerity to quote one of the smartest economists of all time in Joseph Stiglitz, but admittedly, probably a baby boomer. In fact, he's probably older than baby boomer. He's probably of the silent generation, and Joseph wasn't being silent about Bitcoin and cryptocurrency, and he wants to ban it. Tell us why you think he's wrong.
I think we live in a digital world these days, and this is just the next generation of money. So you and I can sit here and have a video chat anywhere on the globe in high definition, but yet if I want to send someone money or transfer value around the globe, it still takes weeks to do that, and it's very expensive. Things like microtransactions are still impossible, and we live in 2019, and I believe that this is just the next natural progression of money.
Okay, so I've got to confess, I never ever do that. If I do, someone else does it for me. My accountants would do it for me. But there is Western Union and other organisations like that. Are you telling me that's very hard to do, inefficient? Tell us what the current state of play is for sending money around the world.
So the rates vary between different countries, but even sending it from Australia to London, you can't send small amounts, or these international transfer fees and exchange rates still have, a 10% spread and a $50 fee. So it makes sending anything under, $500 almost not worthwhile, let alone being able to send $2 a month to your favorite online contributor or content creator. All these sort of avenues that cryptocurrency really opens up, and remittance is probably one of those best examples.
So what you're saying then is, if someone like me who supported Stiglitz in banning cryptocurrencies, someone like me has a website that attracts international readers right around the world who could be interested in investing in the Switzer Report, it would be easier and cheaper for them to do that in a cryptocurrency world.
For sure, we've already seen it. Even guests that you've had on your show, Steve Keen, John Adams, and these guys that don't really love Patreon that much, you can accept far smaller amounts. And in the future, when we have this sort of Internet of Things, you'll be able to, your fridge will be able to pay by the hour, or your smart car when you hire that. All these sort of things can, run on microtransactions because we can pay and process small amounts.
Okay, so that's the good part of it. As an association, because you are a part of a association, is it called the Blockchain Association?
Blockchain Australia, yes.
Okay, well, so as an association, you have to address some of the concerns that someone like Stiglitz and myself had, and because I always like to make my stories more than remotely interesting, very interesting. I quoted Bobby Axelrod from that great program Billions, where he actually was doing something highly illegal, inside trading, actually screwing up a company, and he was going to pay the person involved using Bitcoin. Tell us what we can do to prevent something that's clearly good for business and good for transferring money. How can we stop it from being used by the darker sides of the world?
Well, Bitcoin certainly did have more of a darker past, and it was used on the dark web and that sort of thing. But all the evidence shows, that is down in terms of percentage uses and all that sort of thing. Recently, there was a study by the DEA and the UK Treasury, and they found that cryptocurrencies are a low risk of money laundering and tax evasion, and banks themselves are actually higher risk. We see things like the Royal Commission and Combank being fined and whatnot. So the on-ramps and off-ramps into the cryptocurrency world are tightly regulated, particularly in countries like Australia and the US. And the Bitcoin blockchain is a public ledger. So law enforcement agencies love this sort of stuff. They can track all these transactions and they can catch people far more easily than using cash, for example.
Yeah. So what you're saying is, because it's a public register, and that's basically the great appeal of blockchain. I've never been opposed to the potential of blockchain, but for that very reason. Are you saying that if governments and regulators got serious, they actually could pick up the Bobby Axelrods of this world doing really big transactions in the dark world?
We are already seeing that. We're already seeing criminals being caught and charged. Every day the software gets better to track the different hops on the blockchain. When it comes out at a bank, they can say, well, we know that it originated here and so on.
What about the and one part of Bitcoin, which I'm concerned about as an educator around money, and this happened, it was 2016 in December when the Bitcoin price got over $20,000, and I was doing my radio program, and people were ringing up saying, I've got to get on board on this. And one guy actually talked his mother into selling a house to go into Bitcoin, and that's the kind of thing that worries me. How do we eventually control the excessive speculation that Bitcoin attracts? So
I've been doing this for 7 years now, and we see these cycles where Bitcoin has these large run-up in price and it has these deep corrections, and that attracts a lot of speculators when they hear these stories of people getting rich. So that is certainly something that we need to educate people on about, speculation and volatility. But the reason that Bitcoin has these cycles is it's disrupting the way we think of money. So some people like to compare it to gold. Some people say it's a new form of, Forex and all this sort of thing. And they're extremely large market caps in the trillions. So Bitcoin is capturing market share from those markets. So it's growing very rapidly in terms of its market cap. And that means that some investors make a lot of money and they take profits, and we have new people on board, all that sort of thing. So unfortunately, I think we've got a few more of these cycles to go, and it can be very volatile.
What is the attitude of Treasury and the Reserve Bank of Australia at this point in time? Because clearly you'd have their feedback on what they're seeing and what they're thinking.
Yeah, so I have had meetings with them about how to tax this, and unfortunately it is a bit of a square peg trying to fit through a round hole. So I think some of the best regulations we've seen have come from countries that have brought out new regulation. Whereas other countries are trying to say, oh, we're going to treat this as a currency, some saying this is a commodity, all this sort of thing. So yeah, we want to stamp out that tax evasion, and the Australian exchanges have some of the best regulations in terms of AML and KYC of their customers and that sort of thing. So as long as we are playing within the rules, we don't want people dodging tax or any of that sort of stuff. I think we're fairly lucky in Australia in terms of being in the cryptocurrency community.
Yeah, so are you saying that Treasury and the Tax Office is addressing the transactions that are going on via cryptocurrencies at this point in time, and we're just basically waiting for some kind of ultimate explanation of how they're going to treat it, or they actually do have policies already in place and they're enacting them?
Yeah, they do already have policies in place. They might be looking to update those in the future. But all the regular things in terms of capital gains and trading and that sort of thing are already in place. We've also seen a monitoring program that ATO have announced that they are tracking transactions and they're monitoring all the exchanges. So, if you're trying to avoid tax, then you're going to be caught eventually. That public ledger is there forever.
Okay. Now, you have to understand, Alex, that you explained to me earlier that you came to this because of the unfair development of your parents giving you shares and the GFC coming along, and you lost 50% of it, and you want to know what those nasty people in the high worlds of finance had done to that wonderful gift you've got. Well, Bitcoin, in a sense, has that potential problem, doesn't it? If along comes government and slams a really tough series of regulations on Bitcoin, or even tries to ban it, and all the people who bought Bitcoin at maybe at $5,000 and they're currently in the money, we could lose money overnight. What are your feelings around the potential for governments to ban cryptocurrencies? Likelihood, I guess I'm asking you.
We've already seen some countries like India and China take really strict stances towards it, and it doesn't stamp it out altogether. In a way, you can't really ban Bitcoin. It's just math and software that's open source that anyone can use. So anyone with access to the internet can ultimately use Bitcoin. You can only really control the on and off ramps. Now, all those G20 countries have come back and said we're going to crack down on this even more with the FAFTA rules. We want more information about all the different exchanges and who's sending money between who. But we've already seen a lot of people and talent move to other countries like Malta, and startups move to Southeast Asia that have friendlier regulation. And a lot of the countries around the world don't have banking infrastructure at all. And it's those few billion people who I think Bitcoin is going to benefit most.
But you can see where I'm coming from. I'm quite happy to tick the box on something like this would be great for commerce and international transactions. But if governments feel as though that the ability to control the bad behaviour that cryptocurrencies can be used for, you can see that remains a potential threat for an investor. So I'm nothing from the investor point of view. And I presume along the way you've bought cryptocurrencies at good prices, or else you're going to confess you're a nincompoop investor. But I would have thought, given your insights, you would have done pretty well. But if a regulator comes along and all of a sudden slams something on you, it could really undermine your investments. What is the likelihood, do you think, that governments of the world could come together and come up with a series of draconian regulations that could really affect the current price of what Bitcoin or other cryptocurrencies are being currently priced at?
I think we've already seen that to some degree when we had China stamp out mining and exchanges, and they were the largest part of the market. I really think you'd see strong pushback from industry bodies such as Blockchain Australia and in the US, and say, well, why are you banning this? If we are playing within all the rules and regulations, just like gold and silver, for example, why aren't people allowed to choose where they want to park their money? And I think that's a big question going forward. You mentioned the GFC. We're seeing things like Deutsche Bank, negative interest rates. If the economy slows down and we head into another recession, with interest rates so low, I think deeply negative interest rates and another round of QE, I think people are really starting to question, well, where do I want to park my money? Are there alternatives, whether that's gold or Bitcoin and so on?
The way I always assess the quality of a commentator is their ability to be objective. And you've told me all the good stuff. What are the worrying stuff? What is the worrying stuff that prevails with cryptocurrencies? So we, in a perfect world, we get rid of those, and everyone says, "Oh yeah, they're okay. It's just a new way of doing things. No one's getting away with anything. No one's really exploiting people terribly. I mean, even the conventional financial products are exploited by people. So there's a degree of exploitation we can never get rid of. But what are the big changes that are required to make cryptocurrencies be more universally acceptable?
Definitely more education. You're right to be skeptical, Peter, as is your audience, because 99% of these cryptocurrencies have little to no value. It really is Bitcoin and a few of the more premium projects out there that we are supporters of. So there's lots of scams out there. There's lots of worthless coins. There's lots of speculation. And if people do that at the wrong time, they can get in trouble. So yeah, we want Bitcoin to play within the rules. I think this has got so much potential long term.
Okay, so and what is the price of Bitcoin today?
Bitcoin is around 10,000 US, around 13,000 Australian.
Okay, very good, mate. Thanks for joining us on the program. You're far more reasonable than I expected, Alex, but given the fact you've come on my program, just shows you how reasonable you and your blockchain buddies really are.
Thanks for having me on, Peter.
My pleasure. The big news story today was AMP was absolutely clobbered, and the reason is, well, that plan to sell their life insurance business doesn't look like a plan at all. Paul, AMP.
AMP, look, stock I haven't been in, Peter, and one I haven't been tempted to buy into. Look, I still think there's probably some value in AMP. It's almost getting to a sort of sum of the pieces type equation. They've got some interesting parts of their business that could be sold. For example, they've got a bank that's very profitable and doing all right. It's worth something. They've got an investment management business. AMP Capital runs some good funds, both in the infrastructure space and fixed income and property space. Yeah. That's worth something. But
well, what's brought them down, Paul? For those people who don't understand why.
A key part of the sort of AMP turnaround story, which was criticised by many, was the sale of the divestment of their old life insurance business. Which
why did they want to get rid of their life insurance business, Paul?
Well, I think it's pretty capital hungry. I never quite understood why they were getting out of life insurance, but they made the call to get out of life insurance, Peter. The sale was all done. It had to meet some what are called conditions precedent. One of those conditions was that the Reserve Bank of New Zealand gave it the tick. Yeah. In other words, allowed the buyer to take over and didn't impose any other.
So where does the buyer come from, Peter?
Look, it's Resolution Life. It's a UK company. They buy dead insurance books, Peter. That's their business. But look, anyhow, the deal's not going ahead.
Yeah. But why did the New Zealanders care?
Because they had to get approval, because AMP's got business both in Australia and New Zealand, they had to get regulatory approval from the
Kiwis.
Parties in Australia and parties in New Zealand. Yeah. And the New Zealand Central Bank, which does regulate life insurance business and the banks from a prudential point of view, said, look, I'm sorry, if you want to do this transaction, you're going to have to ring fence your New Zealand assets and your New Zealand liabilities. In other words, it can't be part of this sort of amorphous of an Australasian business with a branch structure.
Yeah, and so they're worried that maybe New Zealand policyholders could be affected by the person or the company that purchases the business and doesn't want to play by the rules that AMP might have been governed by.
So effectively it would have made it much less attractive. The buyer would have had to make sure that all the New Zealand assets and New Zealand liabilities are together. So it means if you have excess capital in Australia, it can't be used against the New Zealand business and vice versa. It just adds an extra layer of complexity to it and an extra cost and makes it less capital attractive. So the Reserve Bank of New Zealand, who is the regulator, said, no, you can't do it. And of course, the buyer said, well, I'm sorry, that's a condition precedent. We really can't proceed on that basis.
Well, we both know David Murray very well, and David's a guy who can control his temper. But do you reckon he was a little bit cranky when you heard about this?
I think there would have been a few things. Coming back to the problems with AMP, I mean, it is... it's one of those classic businesses that's it's all bad news. Yeah. And you just look at it and say, when does it stop? I mean, and the reason it's bad news is because, essentially what is a confidence business? That's the trust of either being an advisor or managing people's money. Yeah. When confidence goes and trust goes, the monies disappear. And of course, it takes a long time for people to move money. And so corporates have got superannuation policies that are managed by AMP are saying, well, we're not really sure we want AMP to be the manager of those. Investors out there who've got AMP investments are saying, oh, we're not sure we want AMP to be our
And financial planners with clients.
And financial planners with clients who've got investments in AMP products, they're also sort of worried. So that outflow takes time, and of course that reduces the value of the business. Now, they have a lot of other good things as well, but it's a confidence play. Yeah. And what David Murray and the new MD are trying to do is turn the business around. But at the moment, they're being hit by all these other things. Yeah. And that's why the share price is where it is. And look, I'm not sure it's right to just put your toe in the water yet. It's getting close because it's looking a bit like like Macquarie Bank did in the GFC when everyone was saying that Macquarie Bank was going to disappear. Yeah.
Don't pick on Brown itself.
Yep, got down to about $16, and of course a lot of people, smarties, did the numbers and said, look, the best transaction for Macquarie Bank is to split it up and sell off the different divisions, and they did their numbers and they bought it. Now Macquarie Bank is in the $125-ish.
Thank God.
Plus or minus a couple of dollars. No breakup. So AMP looks like that. I'm just not sure you need to, it's for high risk.
So it's not a stock that you would wave bye-bye to, but you wouldn't be buying just yet.
Well, I think you've missed your chance to wave bye-bye to. You had to do bye-bye when the whole stuff with the Royal Commission got out. Yeah. I think the only people who really own AMP these days are speculators, Peter, and a couple of other bargain hunters. Yeah.
The share price has never been this low, has it?
It's never been this low, Peter. I haven't said it's a bargain. A lot of people told me at $2.50 it was a bargain. I said, don't get into it. I think there's more bad news. I haven't yet seen the turnaround story for AMP. No. And I don't know what they do, but look, I was like most people, surprised by this announcement today. There is suggestion they also cancelled their interim dividend. I'm not sure that was ever going to be paid, Peter.
Yeah.
There's a suggestion by some of the analysts that they might need to raise capital because this sale hasn't gone through, question mark. That's always negative news on company stock prices. It's for the risk takers.
Yeah,
Peter.
I would say there's a lot of retirees, Paul, who hang on to their AMP shares on the belief that, okay, I can endure a capital cut, but I will still get some sort of dividend. That would be bad news for them today, I'd say.
Look, if you are in this situation, I'm sorry it's bad news, and I'm not sure whether you get out now.
No.
I'm looking at more from a chance to buy back in. I don't think you buy back in just yet, but
Okay.
look, it's in the high risk category, and there's always going to be some upside. in
One last thing, when they sold their life insurance business or attempted to, a lot of people said, oh, this is a dumb move, And
they did say it was a dumb move.
Yeah.
They've been criticised.
So why isn't the share price going up today?
Well, I think one of the other things they pointed out too is that some things have changed. There've been a couple of pieces of legislation around superannuation and so forth, and protecting investors' monies, and they're saying that they actually get less money for it. I think if they sold it today, that's what AMP tried to make out. So they're saying there's something like about a $700 million reduction valuation if you sold today compared to when it was sold some time ago. So, so there is a cost there. Whether it was a bad move, Peter, I don't know. It's one of those stocks. I think it's always been a bit of a dog, and I'm not sure it's still got fleas, Peter. So, but in the high risk category, maybe this is the chance. But look, I think it's not for the faint-hearted.
Yeah, me personally, I think I want to see it hit low, bounce back on some good news, then ride it up. At this point in time, it's a falling knife to me. All right, that's Paul Rickard from the Switzer Report. Coming up next will be a chat to a guy who's actually created a very interesting business called Canva. Coming up. Hi, I'm Peter Switzer.
And I'm Paul Rickard. And we'd like to invite you to our 2019 Switzer Listed Investment Conference.
Now, the Switzer Listed Investment Conference brings together some of Australia's best money managers. On the day, they'll tell you how they're investing both at home and abroad and give you tips on how you can maximise your investment portfolio. Tickets are only $49 and available to purchase now. Don't miss out on your opportunity to hear from Australia's best money managers by securing your spot now. For more info and to purchase tickets to the event, head to www.switzerevents.com.au. Attending will help you make well-informed financial decisions this year and maximise your portfolio. Cameron, thanks for joining us.
Absolute pleasure.
Now, I feel really bad about this because I didn't know enough about you, but the more I've read about you, the more I realise all Australians should know about Canva. Like, where does the name come from, for starters?
It's a bit of a funny story. So we were originally called Canvas Chef. At least that was what was in Mel's head.
Canvas
Canvas Chef.
You're cooking up canvas.
Exactly. That was the whole premise. And I remember she did these horrible mock-ups of what the product would look like, and it'd be like.
This is your co-founder, Melanie Perkins.
Yes,
okay.
Our CEO, and she would talk a lot about design ingredients of what you need to create a design. Okay. So you might need some images, you might need some fonts, and she had this whole thing where you'd throw them into a wok and you'd cook them up, and that was where Canvas Chef came from. Yeah. Fortunately, we decided to change our name. Yeah. And yeah, Canva is kind of a play on the word canvas, and it's just a good domain name.
Okay, do designers, because I should explain to the audience that you actually, your bread and butter is to look after people in the design space. Is that a fair call, or is it bigger than that?
I think it's a lot bigger than that. I think we kind of see ourselves as a new way to communicate. And I think visual design is a very strong and important aspect of communication, but something that not a lot of people have had access to before. So if you wanted to create a business card or a flyer or even a really great looking presentation before, you would have to go to a designer, liaise with them, collaborate with them. They'd have to do a bunch of work, and it's a really long and extensive process. And not a lot of people would take the time or the money to go through and do this. So our tool is predicated around bringing that access to design to people who haven't had it before. So if you haven't had the education about design, you haven't been able to pay the large cost of a lot of these tools, and you haven't had the time just to do it, we let you come in to Canva and produce all that stuff. along with T-shirts and social media posts and a bunch of other things, and just make it super simple and easy. And the way that we view it is taking design from 1% of the world using it to the other 99% of the world using it.
So you're allowing everybody to become designers effectively.
Yeah, it's kind of a democratization of design.
Okay, so give us an example of how a typical person or business, are they people or mainly businesses using your services?
It's the whole gamut. So we have individuals who might use it for their own website or their own
like
blog.
a nasty T-shirt, hating a politician or something like that?
We only just launched T-shirts, so we're still sussing out the audience on that.
Okay.
But we originally started with a lot of social media posts and digital communication. So it might be someone who's running their own florist. They might want to promote their business online, on their Instagram, etc. So they can jump into Canva, take a bunch of their photos, put them together, add some text, add some extra imagery to it, and create something that communicates what they really want and looks really good as well. So we have small teams like that, all the way up to big, over 1,000 people teams who use Canva at a more industrial scale. So those companies, we often see them who have a really strong brand or lots of imagery that they want to use, and they want to give that to all the people in their company and enable them to create their own communication tools. So that might be a presentation or a flyer, or yes, possibly even a T-shirt now. So yeah, we run the gamut, and each of those people needs different things from their design product, and we're in the process of building all of that for them.
All right. Now, I've got numbers here. 190 countries, 100 languages, 10 million users. Someone reckons you're worth $3.6 billion. This has become bigger than Ben-Hur, hasn't it?
It's pretty big. We're up to close to 20 million active users now.
So we'll double the values, 7.2 billion.
still 3.6 at the moment. But yeah, it's astounding how big the numbers get. So we do.
You've gone viral effectively, haven't you?
Yeah, definitely. I think we're starting to seep into the general culture of the world.
Yeah, well, the fact that I'm interviewing you means that you are entering general culture. But clearly there have been lots. Has there been a certain generation that really has adopted you more than, say, another generation, or are you cutting across all generations, do you think?
I think we've got good cut through. Obviously, our bread and butter used to be social networks and communicating over those kind of applications, which obviously lends itself to younger audiences, etc. But I mean, through the growth through large companies, you see a whole range of people using it, from people just entering the workforce to people who've been there for a really long time.
Yeah. Are designers, clearly the big companies, the designers in these companies are finding you a fantastic resource so they can add their creativity with what you clearly give them access to. Is that what's happening there? Yeah,
for the designers, it's an interesting proposition. I think it lets us scale their skills. Yeah. So at a big company, they'll often have a very small design team who can't possibly service everyone they need to. So a lot of the work at large companies doesn't get done. It either gets not done at all, or people take it into something like Microsoft Word or PowerPoint and just kind of cobble it together. So you end up with some really bad pieces of design. And giving designers at these companies the ability to create templates and brand kit that they can then farm out to the rest of the company is really valuable for them.
Okay, so in terms of where this company is going, you're not listed at this point in time. Do you think I have read that if you do list, you probably would list in America?
Yeah, I think listings obviously sometime in the future. We haven't given it a lot of thought as to when that date would be. But America is certainly attractive to us for a number of reasons. I mean, market size is a lot bigger there. And I think also technology investment is understood a bit better over there as well. So all the major tech stocks are listed on the NASDAQ there, so it kind of makes sense to be in the same crowd.
Yeah. So how do you make money?
Through a bunch of different ways. We kind of started out with a slightly different business model to where we are now. One of the key innovations that we had around Canva was that there were all these things that went into the design process that were very separate. So you had things like buying stock photography or buying fonts or buying layouts, and then combining all that in a different piece of software and then collaborating on that with different people via email, etc. What we did was pull all that together into one product that people could use and a one-stop shop where they could get images, fonts, layouts, everything they needed for their design. And what we've done is built up our library of images, so now we have close to 50 million images that you can use on Canva. Some of those are free, some of those are paid for, but even the paid for ones we can offer at a much cheaper price because we control both the elements and the tool itself. So we know what people are using this photo for in their design, as opposed to traditional stock libraries where you buy the photo and then you could put it on a billboard or a flyer or a business card or wherever. So that means we can offer images for $1, which is extremely cheap and accessible, and is again why we're kind of taking design from a very small group to the other 99% of the world.
Have you contracted services from, for example, a company like Getty was a famous one where people would go for photos. Are you working with them, or have you actually collected your own library of images so you don't have to work with anybody?
We've built up our own library. We've contacted a lot of the photographers who normally take their photos for a company like Getty, and we've done arrangements with them. And to be honest, they were the ones that were most excited about it because they could see the opportunity of a tool like this. Whereas somewhere like Getty took a little while longer to come along, but we have managed to partner with them recently and gotten access to some of their collection. But we still have a very vibrant and rich, diverse contributor community who submit photos from all over the world, focusing on different demographics and different use cases. And it's really exciting to see how rich our library has become.
Okay. When you listen to a story like this, it's fantastic. But what a lot of people don't understand is that there must have been money issues along the way, because when you started, okay, you might have had a small amount of money and it worked in a small sense, but as your dreams got bigger and bigger, you needed more and more money to create like a library like this. How have you solved the money problem? Because people watching this would love to copy you, not necessarily in your industry, but in their own particular business. But the money problem, how did you guys overcome the money obstacle?
I think there are a bunch of kind of different tactics that we use. So on the image front, we had good arrangements with our contributors. So that involves we'll pay you when the image gets used. So we had to build the product first and then feed the images into it. And when someone uses it, we pay the contributor royalty for that. So that means we didn't have to put up huge amounts of money up front for that. In terms of building the team, we started off with the three of us and started building it. And very quickly we managed to gain the attention of some investors, and they liked the idea and liked the team and what we were building. So they put in some money that we could start paying ourselves and also getting a larger team on board as well. And since then, it was really hard to get that first investment round, but progressively it's gotten slightly easier. And now investors kind of come to us rather than us going to them.
It sounds like an episode of Silicon Valley. Was it like that?
A little bit. It's Silicon Valley paralleled us. Like the first season started when we first started, so it's been really amusing to see the journey along the way. Okay,
so tell us what you think was the greatest challenge to take you where you are today, and how did you beat that challenge?
I think the greatest challenge we've had is the growth and not only the scale of the growth, but the pace of that growth. And that's been on every front, from number of users that we've had to the number of employees that we have at the company. And what we've found is that every time a number doubles, it generally breaks. So when we went from 10 employees to 20 employees, the way in which we organised the company and the way in which we conducted meetings and just related to everyone really changed. And the same has happened every time we've doubled headcount. So understanding when things are breaking and having the impetus to just make a call and say, okay, we did it this way yesterday, but today we're doing it differently, is often a really hard thing, but probably really beneficial to us.
Okay. Some people watching this would say, what they've done is what I'm failing to do, and that is you've got your business message and your product has effectively gone viral. That and a lot of your advertising would have been done by other people who just talked about you.
Yeah.
How do you think you made that happen?
I think for us, it's been a focus on product and product quality. So we're very much a product-first company that thinks about what is it that we're building and what is it that people have in their hands once we ship it to them. And it's incredibly important that they have a great experience, that there's no bugs, there's no pain involved in using the product, and that really it's a delight to use it, that they're excited to use it, and they're excited to tell other people about it. And we've constantly focused on that over the last 7 years. Not only in the initial product that we created, but at every time we've had to iterate on it and improve it and introduce new products as well. So I think that ultimately that's the only way you can guarantee that word of mouth, is have something that people are really excited and happy to use.
When I watch TV nowadays, if one television station uses someone else's product, I see in the corner some little reference that's come from Sky or Nine or whatever. When people use your product, do people instantly know that Canva has been used?
Not so much. We don't force a watermark onto the finished product. If you've used one of our paid images but haven't paid for it, it's got a watermark across it. But not many people publish that to their social network or anything like that. We've really relied on people just wanting to share the product with someone else. And that's worked a lot because people love helping other people and telling them their secrets, as well as inside big companies. If a marketing person's using it and they want another marketing person to use it, they'll share their design with them, get them to collaborate. And we've seen a lot of growth through that mechanism as well.
As I listen to you and I think about your business and other businesses that have grown in the digital era, I just thought to myself, imagine how this could have been done if there was no credit cards.
Credit cards definitely make payment a lot easier, yes.
Yeah, it does, doesn't it?
Particularly for team growth.
Yeah.
We've got a great team model where someone can start using it at a bank or wherever, and when they add a new team member, it's just a little click of a button, and they don't really have to think too much about it.
That's right. Is there anything else you think I should, or is there a better question I should have asked that I haven't asked you at this point in time?
I think what makes our company unique.
Yeah. What makes your company unique?
For me, I think it's about the culture and the values of the company. I don't think we would have scaled as rapidly or attracted the talent that we have without creating a really unique culture that has a mission behind it. And we've worked really hard on that over the years to get people on board who are passionate about empowering the world to design, as well as making positive change more globally. Like for us, it's not just about creating an app that you can use on your phone. It's about creating moments where people use Canva to improve their lives and the people around them as well. And the number of stories that we've got back of people using Canva to create their first business or get their first employee on board or pitch their new idea, it's incredibly humbling when we get an email from someone who's used Canva to do that.
Okay, and so is there any one person or any one book that's been an inspiration to you in creating this culture?
Probably the book that I've most drawn inspiration from is actually a book by one of the founders of Pixar. It's a book called Creativity Inc. And it's a fascinating insight into how to merge the growth of a company with creativity. And I think Canva is a very creative product by its very, very nature, and it's a very creative company. And Ed Catmull kind of takes you through Pixar's story and how they went from a very small team to a really huge thing, and how they figured out the process of creating movies while still keeping the emotion and the creativity in there. It's a really good read.
Okay, thanks for joining us.
No problem.
And finally, if you've enjoyed the Switzer TV experience, please hit the like button and subscribe to our YouTube channel. I'm Peter Switzer. Thanks for joining us. See you next week.